Greetings, members one and all of the Salivation Nation. How will gold mining's biggest merger shape the industry? That's a question to be asked for the merger of Barrick Randgold. Comes to us from miningtechnology.com. It's going to be quite interesting. I think it'll have an effect on those of us who buy. Let's see how from this opinion piece here, this analysis piece that was published on the 14th of January. This is the $18 billion mega merger of Barrick Gold and Randgold Resources was one of the mining industry's biggest earth-moving moments of 2018. Are M&As simply a logical choice for mining companies looking to pool expertise and cut down their costs? Or do they go deeper, providing crucial technological opportunities for unprecedented mine operations? When London-listed Randgold Resources announced an $18 billion deal to merge its operations with Canada's Barrick Gold, together they agreed to create a new Barrick Group, the world's largest gold mining enterprise. Randgold brought to the table 5 active gold mines spread across 4 African nations, from Mali to the Democratic Republic of Congo, as well as an additional gold exploration project in the southeast of Senegal. The company has targeted an aggregate production of 1.3 to 1.5 million ounces this year, with each ounce of gold costing between $590 and $640 to produce. And I always thought it was a little less than that, but and there you go. The firm planned a capital expenditure of $225 million for 2018 alone. Meanwhile, Barrick is active in 10 countries and is considered the largest gold miner in terms of reserves. The company claims to have a 64.4 million ounce of proven gold reserves and an extra 88.6 million ounces of measured and indicated gold reserves, as well as 8.1 billion ounces of proven copper reserves. Combined, the two pretty much have the world's gold mining production covered. But if the green light is given for them to become one entity, it is likely to affect the sector. Yeah, that's for sure. We'll see how. So why are they merging, and how will it be approved? And will it be approved? One prevailing argument behind the merger is that the mining companies are beginning to see the necessities to pool the resources to stay competitive in an industry that is becoming stagnant, if not showing signs of decline. And some people have speculated that we have moved past gold peak production, but there could be a myriad of different reasons why that's the case, and that could be one of the reasons why this merger took place here. With increasing pressures to create value for all stakeholders, majors are continually looking for ways to improve productivity, says Rebecca Campbell, partner at international law firm White & Case. The recent Barrick and Randgold merger has highlighted that synergies can drive the consolidation of two majors, where a balance sheet and improvement and increased scale will create one of the largest gold mining companies in the world. Randgold CEO Mark Bristow echoed the need for the merger now more than ever. In a written statement to the press on 24 September, he stated, "Our industry has been criticized for its short-term focus, undisciplined growth, and poor returns on invested capital." And of course, with a lot of different things happening, especially with the recent developments with Republic Metals Corporation, where does some of that gold come from? And you have to wonder, especially in some of these African countries, where it's coming from as well. But that's notwithstanding. The merged company will be very different. Its goal will be to deliver sector-leading returns, and in order to achieve this, we will need to take a very critical view of our asset base and how we run our business, and be prepared to make tough decisions. Before the companies can officially complete the merger, they have to jump some regulatory hurdles. The first of these hurdles was cleared on the 1st of November when the South African Competition Tribunal unconditionally approved the merger, laying the groundwork for a completion date of January 1st, 2019. Soon after, the shareholders of both companies voted in support of the merger. And so the question is will smaller miners survive M&As? Legal checks like anti-competition tribunals must be conducted, and for good reason. Money mega mergers such as Barrick and Randgold, Glencore and Xstrata, or Rio Tinto and Alcan create concerns in the industry for smaller mining companies who cannot compete financially against the big monopolies. Monopolies have serious leverage in an industry as they can produce materials at lower costs, employ greater economies of scale, and even restrict supply to push the price of the commodity, such as gold, up. And I think that's where you're seeing, in part, some of what some of us speculate was some manipulation going on. So it's not just the banks that can do it. It can also be some of these bigger mega mining companies. Take Nicaraguan miner Condor Gold, for example, which is struggling to compete on the London Stock Exchange this year. Its share price has fallen by over 50% throughout 2018, from highs of 59 pounds and 50 per share on 22 January to just 23 pounds as of the 16th of November. Condor Gold chairman and CEO Mark Child told Reuters in October, London is not a great place to be listed as a junior explorer. There is not a clear understanding of what we do. In response, Condor has asked for approval to be placed on the Toronto stock market as a secondary listing, where the company aims for a much higher valuation. While there is an opportunity for smaller miners to capitalize on early rises in share price after a big discovery, it is far more unstable than the major firms. For the majority of the new firms in the industry, however, the early years are sink or swim, requiring heavy capital injections and stable revenue streams. Africa operating Toro Gold has frozen plans to be listed in the London stock market. Financial advisors are said to be warning smaller companies to avoid listing themselves on equity markets, instead recommending that they consider merger opportunities. Campbell adds, for some miners, merging with a technological champion may not only be a way to implement value efficiencies, but the only way to survive in the modern world. Kind of a shame, really, in a sense, but merging mining and technologies will be crucial. If successful, the merger could enable future M&As in the gold mining industry, especially between those firms that have a strong grounding in mining technology. Miners are quick to embrace these technological advances that will be perfect merger candidates for miners that have not yet adapted to the modern world, but with ample resources to take the leap. Indeed, adopting blockchain, for example, could revolutionize how gold is manufactured and delivered in the industry. Blockchain's role in efficient, sustainable, and transparent supply chains could be a game changer thanks to its ability to promote trackability, transparency, and security through open, peer-to-peer, and incorruptible data sharing, explains Campbell. Similarly, other technology advances promoted primarily by the majors, such as the advent of driverless fleets, are cutting labor costs and increasing productivity. Despite the current hype circulating blockchain, and now it can improve efficiency in the gold mining industry, there are signs that it may take major industry leaders a while to assess the real advantages of using the technology. While the potential for traceability means that the blockchain revolution in supply chains is inevitable, with the larger firms like the new Barrick Group first in line to incorporate it, there will still be underlying issues of scarcity and sustainability around the gold industry that the technology will not be able to solve. One of the major challenges for the new Barrick Group will be justifying the massive energy usage that the blockchain requires and associated costs. Other costs, including the significant levels of education and training that go into digitizing an ancient industry. It is here that M&As will be particularly useful in generating enough revenue for gold mining companies, who may have to dig deep into the pockets to develop and apply the technology. Will we see new gold exploration? The world's biggest gold mining merger could also shake up the industry's exploration efforts. When a big merger comes to mining, it usually results in the large conglomerate acquiring mines from the smaller company, absorbing all the hard work the junior has done in exploration. And we're seeing the same type of thing happening in farming too, with these big farms, eating up some of these smaller farms. This is because it is often economically better to buy and reopen a dormant mine than to build your own, which could lead to a situation whereby fewer and fewer gold mining exploration activities occur. This is reflected in the statistics, and with the world's largest gold mining merger, we could see the world's biggest slowdown in the number of gold deposit discoveries. Major finds such as South Africa's Witwatersrand Basin or Australia's Super Pit may not happen again. It is also reflected in the size of exploratory budgets and non-ferrous metals. Statistics supplied by S&P Global showed the exploration budgets were on an upward trajectory, peaking at around $22.5 billion in 2012. Since then, however, they have fallen across the industry to a low of $6.9 billion in 2016, the lowest they have been in the last 11 years. However, this doesn't have to be the case for the new Barrick Group, which can pool resources and explore new opportunities. There is a political motivation for the merger. The extreme economic benefits of the merger are well publicized, but hiding below the surface could be one political motivation: to rid the companies of Randgold's African reputation. This year in particular, investor sentiments towards Randgold has turned negative, with company shares plummeting to a year low of 4,655 pounds per share on the 14th of September. Hiding below the surface are political concerns in areas where Randgold operates, particularly in South Africa and the Democratic Republic of Congo. Could it be that by becoming the new Barrick Group, the two companies can benefit from Barrick's good name while still absorbing Randgold's Tier 1 African assets? It will be interesting to see where the new Barrick Group will operate next. But, a lot of this goes down to the ultimate question, which is not really addressed in this piece here, and that is cost. Could they control cost? If they're the biggest miner, and even with blockchain technology, it's only as good as the data that goes into it. They may mine some gold that may not be traced. They can choose whether or not to trace the gold through blockchain. And not sure exactly how that would work anyway. I know there's been some talk of blockchain technology being used to track gold, but that is until you melt it down. And we may see more of that happening, except for collector coins and pieces or certain bars and assay. But even as such, it's really almost impossible to really track gold, or silver for that matter. But nonetheless, with their operating costs, which they could go down, they also can control the price from which it's released from their coffers, once it gets sent out for refinement. And they could also hold it until the price reaches a certain level, which could, very easily cause the price to go up if they're swallowing up all these other mines out there. It's interesting. So here you see representatives both, and here you see mining operation there. So it'll be interesting to see how this plays out. I think we're going to see more of this. We already are seeing it in other areas and other sectors where these big companies merge together. AOL, Time Warner. You've got Comcast, Adelphia, Xfinity, all kinds of different things. These big companies coming into play, and we're us that are on this end of the spectrum are we people. We purchase the gold and we buy it at a certain level at a certain price, and but nonetheless, the gold we buy in the future, maybe we could have another kind of spot price tied to it based off of their production costs. And these numbers here are talking about $590 to $640 an ounce. It's quite a big gap between the two. But it doesn't tell you if that's all-in cost. I would assume that would be all-in cost because I've heard it was actually a little less than that. But anyways, we shall see. But nonetheless, there it is. Quite an interesting story here. And we'll see what happens. I guess it's got to be approved first, but more than likely it probably will be. Very interesting indeed. Post your thoughts below about this situation with the merger of Barrick Randgold and what your thoughts are concerning it. And of course, we also have the Valcambi Swiss purchasing Republic Metals Corporation. So there's that aspect of it too. Post your thoughts below. Would like to extend a multitude of gratitude y'all for watching and encourage you to please rate, comment, and subscribe.